How's it going? I'm Ryan, and today I'm going to go over the one trade that I took on NQ. Had a decent winner, ended up risking a bit more than I would have liked to have this trade play out. But without that additional risk, I would have been stopped out for a loss. So added a little bit of risk, but played out looking at about a 1-to-1 risk to reward ratio on this. So obviously I'd like to have that closer to a 1-to-2, but like I said, without the risk that I took, I would have been stopped out for a loss. So the risk is what allowed this trade to play out. Without further ado, let's get into some of the levels I was watching, and then I'll get into the trade and why I took it. So coming into the day on NQ, I'll pull up like an hourly chart, and we can just take a look at where we were. So we've been selling off, right? Pretty much every morning has been a sell-off. Some days we have a bounce, a little bit of a recovery, but overall we've been making lower lows and lower highs in a consistent downtrend. So coming into today, like I said, lower lows, lower highs. We formed a bit of a low overnight into the pre-market session. We were coming up to approach this level here around 21,450 or so. This is an area of support turned resistance. This is also a level that was a level that I derived from the point of control of either a 4-hour or 8-hour chart. All my levels are from 4-hour or 8-hour charts, and specifically looking at points of control, aka the price at which the most volume was transacted on those 4-hour or 8-hour candles, and then looking for areas of confluence in addition to that. So that's where these levels are coming from. We have quite a few here, and it may look like we have a ton of levels, but due to the nature of how big these drops had been, some of these levels are 100 points apart, and it just doesn't really look like it, right? We have one at 21,100. This next one's at 21,220. So 120 points between these levels. Some of these smaller ones are about 50 points or so, 40 to 50 points. Realistically, I'm looking to catch 30 to 40 points per trade. Obviously, I'd like to catch more, but these levels are spaced appropriately so that if I catch a move level to level, that takes care of what I need to do. So coming into the day, we were rejecting off this level, looking pretty weak. We were definitely considering a continuation of this downtrend. I'm not going to go over all these levels, but you can kind of see where they're at. We're looking at the 1-hour time frame here. So I'll pull up the 5-minute and we can just take a look at how the day started. Technically, I took 2 trades today. The first trade was in the pre-market right here. I took a long position here, and that was because, as I showed in the 1-hour earlier, that we had kind of held this level and we're making our way up on the pre-market session. We had kind of broken this little swing high, set a new high. Looked like we had, maybe reversed trend in the short term, not on a long term, but on a short term. And then we were holding this level. Things were looking all good on the 5-minute, 15-minute. So I entered pre-market long with just 3 contracts. Normally I trade 6, so this was a half-sized position. I don't like pre-market trades, and this will probably, hopefully this is my last one because I rarely have them work out in my favor. So I was stopped out for a small loss here. That was actually my first trade of the day. But coming into the day, like I said, we broke down below this level. We opened below it. We immediately sold off, closing around this like 21,350. Came up and retested this area. It's like 21,400 or so. Sold back down. Just sold right through this level here, which I suspected that it would act as some sort of support due to what reaction we were getting in the pre-market. However, it did not. Sold right through it, kind of retested on the following 5-minute candle, came down, tested this 21,220 level, came back up to test near this 21,300. That's an 80-point swing. So like I said, these levels look kind of close together, but this is some pretty serious volatility. So these moves are substantial if you're able to capture one. I was looking for entry short, and I've been having a hard time capture some of these moves to the downside on all this sell-off that we've been having, and that is partially due to my strategy. I want to see some sort of confirmation with a candle close on the 5-minute. I like to use the 5-minute a lot for confirmation, and then I'll enter on a 1-minute, but normally I'm looking for price action, volume, etc. on a 5-minute to to enter a trade to justify an entry. And when we just have these big sell-offs, I find it that I would have to enter more so on like a 1 minute, as opposed to like waiting for a setup on the 5 minute. So I've been missing a lot of these down moves, even though I understand it's a downtrend. I understand I should be trading looking to the downside because that's the majority of the move. That's where the largest opportunity is. And I just haven't been able to do that this week. We eventually make our way down. We didn't quite test this 21,018 or so, we'll call it. But we started to round out here, and we started to see a large amount of volume as we had that selling momentum kind of slow down, right? We have these large red candles just dropping, looking very bearish. And then we start to have smaller candle bodies, some lower wicks forming, failure to break lower, a little bit of a rounding on this bottom here, which to me indicated a potential for a bounce. I was looking at longs here. I did not get in, but what I was watching was a break above this 21,100 and then potential continuation up. And let's take a look at why I liked that. So if I pull up the 5 minute chart, what we can see here, and I'll zoom in so it's more accurate. So we're looking at both. This is 5 minute, this is 5 minutes. So these reference the volume profiles of these candles. We see right here we had stacked points of control right around this like 21,120 or so, or excuse me, 21,190. So right in here we had a lot of volume occurring, and then we dropped pretty fast after that, and there's not a lot of volume in this space in between. From there, you know, we got some volume at this level, which we'd expect. We have liquidity at this level, so we'd expect, you know, buyers or sellers to be present in that area. And then we came down, and you see those points of control kind of shift towards the bottom of those candles. We see those candles start to hold and start to round, like I said, looking like a bounce is in play. At this point, what I'm looking for is a break above both this level and this point of control. So we have two things aligning here. We have a higher time frame level, and then we have a lower time frame point of control here, and then we have this void of volume, or at least just not a lot of volume in between, you know, 21,190 to 21,100. So about a 90 point area where we didn't have a ton of volume transact. So basically what I'm looking for here is a strong move above this level, which we get here, and that's what prompted my entry long. And then I wanted to see price come back up and move towards this liquidity up here, right? Price moves from liquidity to liquidity. It's what drives the market. So whenever you have, you know, liquidity up here, liquidity down here, and a gap in between them, I would expect if we can break, you know, either one of those, we would see price move fairly quickly. That's the idea, at least, fairly quickly to the next level of liquidity. Because there's not a lot of volume, there's not a lot of orders in between to cause things to chop, right? If it has that momentum, and then we would expect it to reach the next level. So we got this strong break above here. I entered long. My first take profit was about 35, 36, 37 points. That was just kind of arbitrary. I just kind of put it up near this candle open, or this candle body up here. Normally my first take profit's always 30 points. I thought we had potential for like a, you know, a larger move, 80, 70, 80 points here. So I was willing to push my first take profit just a little bit, not a whole lot, because I still want to get that profit and de-risk, you know, 30 points is good for me. So put the first take profit right here, that hit. My next take profit was just below these volume nodes. So my theory was that price would come up and test this 21,190 because that's where we had that stacked point of control, aka just a lot of volume transacting up there. And then you kind of see this price action in this area. So I placed my runner below that, thinking that would be a little conservative. I placed around 21,170, around the low of this wick, high of this wick. So we missed it on this move up. We missed that final take profit on my runner by just a few points. And then we pulled back and stopped my runner out for a small gain of about 16, 17 points in profit. I took 6 contracts here. That's my regular sizing. This is from a demo account, so my Regular sizing is 6 contracts, taking 5 off at the first trim, leaving a runner. And yeah, so it worked out. Let's talk about where my stop was and how risk kind of influenced this trade. So I said in the beginning of this video that I had a bit more risk than I would have liked to take on. Generally, I'm looking for about 15-20 points of risk. But realistically, when we're having hundreds of points moving in minutes, NQs moving hundreds of points in minutes, you're going to have to accept a bit more risk because if you try to have a 15-point stop loss when price is swinging, 60, 80 points in a single candle, there's a high likelihood that even if you're right in your trade, even if you have the right idea, you can get stopped out just by like a rogue candle, a rogue wick, So I entered once we broke above this level and held it on the 1 minute. My entry was 107. And where did I place my stop? Well, I was looking initially, like I said, it just automatically, I have it set to 15 points, but that would have been, right down in here somewhere. And looking at how price was moving pretty rapidly, even these small candles are 50 points. I figured that a 15-point stop, if we got any sort of pullback, was going to get stopped out. So I put my stop below the candle that broke out. So I wanted to see a break above this level and continuation to the upside. This was the candle that did it. We had good volume. We had a nice strong bullish candle. We broke above. So I placed my stop below this level, and it was about 50 points, which is more than double what I would normally do. So when price started pulling back here, I was definitely sweating a little bit. I can pull up the 1 minute chart. It might take me a second to scale out here, but I can't say that I was 100% comfortable throughout this trade. I stayed true to my trade and tried not to panic or anything. But my stop was here, it was a little bit lower. It was like 57. So my stop was here. We didn't get all that close, but we did get pretty close here. We got about 10 points away. The thing that was keeping me confident is that we had, like I said, these points of control down here, and I could see price coming down and wicking into this area and then getting pushed back up, and usually on some pretty good volume, right? So that told me that buyers were still in the area. There's still a likelihood that price would move higher. And then when we got this breakout here, we got that first take profit. As price started to weaken here on the 1 minute, we see volume drop. We see weak price action on the 1 minute. I was, debating moving my stop up and just getting it as much as I could off the runner. But like I said, I wanted to kind of keep things true. I placed my stop loss just kind of right at these wicks, right off these 5 minute wicks, like right in there, and on 1 minute. And you can see that when we wick down and stopping out there for a small gain. So didn't quite get that move to the upside that I thought we would get. So my trade idea was partially correct. Could have had a better entry had I waited. We got this breakout. I entered earlier than I probably should have because I thought that with that low volume and that breakout that we got, that price would move faster than it did. So could have had a better entry. My risk, like I said, it was more than I wanted to, but it was kind of necessary for the trade to play out. So it is what it is. Yeah, and then you see we kind of pull back. Price does eventually come up and hit this like 21,190 where we have that liquidity. Pull back again before breaking higher. So that was a one and done type of day. Like I said, I took a pre-market trade, and I don't really consider that. It was small size, and I shouldn't have taken it in the first place because I don't take pre-market trades as part of my rules, so they never really play out for me. So could have avoided that loss and had a little bit bigger day, but overall we have I think 315, a little under 316 on the day. We're happy with that. I'm going to continue to try to refine my strategy. I want to be able to take advantage of these big moves to the downside, right? We're dropping hundreds of points, and that's an opportunity to take smaller size. I can use 3 contracts and just aim for bigger moves, and that would allow me to de-risk as well, because I could have 20-30 points of risk on 3 contracts. Not that bad, right? But if I'm able to capture 70, 80, 100 points, those profits are going to be pretty substantial. So Looking to continue to refine my strategy, find ways that I can maybe look for entries on these moves down, because that's where the majority of the opportunity lies, obviously. But nonetheless, happy that this trade worked out to some extent. Didn't get the full move that I expected, but it was a winner nonetheless. Didn't FOMO into that move down. We did have some nice break and retests, right? We had this break, this retest, this break, this retest. Kind of got a break and a retest here before moving down. Any of those would have worked, but for some reason I just wasn't confident in entering them with how volatile price was moving. So we got some stuff to clean up, right? We got some things to get better at, but perfection isn't really a reality. We just try to be consistently profitable, and the account is at all-time high. We are growing it over time. Might have some setbacks along the way, but we're not going on tilt. We're not oversizing. We're not blowing anything up. And look to continue that and just continue to tweak and refine my strategy. So that's all I got for you. I appreciate you watching. Thank you very much. I stream live Monday through Friday on this channel, so if you want to stop by, say what up, I would love to have you. That being said, once again, thank you. Hope you have a great day. Peace.